how would Bitcoin be different in gold? How would Bitcoin resist what happened to gold?
Yeah, that's a great question. So a couple of things. I mean, one, it's naturally deflationary, whereas gold is not. I mean, the supply of gold in the world is growing at about 2% a year, and in 50 years we'll have twice as much gold in the world. And gold has an alternative usage, which is well, there are a very small number of industrial uses, but there also is the jewelry usage. Bitcoin is pure money based on energy. And it's really the only form of pure money. And the amazing thing about Bitcoin that's so unique is, and the other thing is, the price of gold responds, or the supply of gold responds to the price. It's a commodity, and I can assure you that if the price of gold were to triple tomorrow, we'd mine more gold, right? I mean, the supply would increase. No matter what happens to the price of Bitcoin, the supply ain't increasing. That's it. We're done. So that's the biggest difference, that Bitcoin is deflationary. And we should live, as Jeff Booth has pointed out, we live in a deflationary world. We should live in a deflationary world because technology is always improving productivity. And the reason why the average man has been hurt so bad is that productivity has been stolen through the inflation that allows people who can game the system to get all the wealth. But back to Bitcoin and gold, and the gold standard, and them both being sound money. So if we went to a gold standard, it would be better than what we're on right now, but it wouldn't be as good as a Bitcoin standard. And in part that's because nobody really knows how much gold there is. Nobody knows where it is. It's hard to move around. It's hard to audit. It's hard to prove. There's fake gold, in the sense that people have taken tungsten and coated it, which is close to the same atomic weight, and coated it with gold. I mean, it's difficult to verify, etc. I mean, Bitcoin is very, very easy to verify. It's on a ledger. You can see it. You can prove that you've got it by moving a small piece of it, etc., etc. The negative on both of them, and I said it in that tweet, and you pull it up again because I think it's important. You know, I look at my takeaway, my following. Look at my response. Um, Bitcoin does face some of the same paper problems we have. So let's talk about derivatives for a moment. I mean, part of the reason why the price of gold is where the price of gold is because there's a lot of paper gold. And if we actually did the math the way it was done in the 70s, when we were on a gold standard, or semi-gold standard, at least at the international level, if you took the money supply figure today and divided it by the gold that the U.S. holds, gold should be at $80,000 an ounce. It's not. It's at 18,000 or 1,800 an ounce right now. It shows you how much money we've created. And the reason for that difference is that we created a lot of paper gold. Robert Rubin, Larry Summers, Barsky, they did a paper called Gibson's Paradox. And when Clinton was president, I recall very clearly James Carville saying, "I want to come back as the bond markets have all the power." And what these guys figured out was, gold is the alarm bell that tells you you're inflating the money supply. And so they figured out, if we can sell paper gold, we can keep the price of gold down, and everyone will think there's no inflation, when in reality there is, and the economy will look great, and I'll get reelected. And that's what Clinton thought. And so that was really, in my view, the beginning of the serious gold suppression through the sale of paper gold. And I think they do it off the balance sheet. I'm pretty sure they do it through the Exchange Stabilization Fund and a few other things that we can't see, and we'll never be allowed to audit. But they've intentionally held the price of gold down to keep the fiat game going. And there's nothing to, and so when you get into a financial game and everyone's playing and betting on the price of something, if you are the biggest player, it's like being in a poker game. If you're the biggest player with the most money, and you can put all your money on the table on a bet, and nobody can call your bluff, you win by default, right? And so, in a sense, in some financial games, the people with the biggest balance sheet have got the game rigged where they can win. I mean, as an example, look at the Hunt brothers. They were able to take the price of silver up to 50. They had the silver market cornered. They could have ruined basically everybody who was a supplier. They could have ruined the silver market. And what did the exchange do? They changed the rules. They changed it to liquidation only. Basically said, "Sorry, Hunts, we're not going to let you win." And that's kind of what these guys do, the guys who run the government. And so Bitcoin is a form of sound money, but who's to say that somebody couldn't get into a paper contract and say, like look at FTX as an example. They carried a bunch of Bitcoin in theory on their balance sheet. People gave them money and said, "Buy Bitcoin for me," right? They thought, if they looked at their account statement, they owned Bitcoin. But the fact of the matter is, they didn't own any Bitcoin because FTX never went and bought it. So they owned paper Bitcoin. They had a claim on Bitcoin against FTX, but FTX hadn't actually bought the coins. And so as a result of that, that kind of a paper derivative, and there are paper derivatives, there's a futures market for Bitcoin, and there are a lot of private market derivatives as well. And Glassnode has laid this out, and Caitlin Long has done a very good job of looking at it as well. And so the fact of the matter is, we not only have to move to a Bitcoin standard, but we also have to, at a legal level, ban derivatives, because derivatives are a tool for financial people to manipulate markets, to steal wealth from other people. Full stop. I mean, that's all they are. The only way we should, it started as, a futures contract was for a farmer who was producing corn, and General Mills, who was trying to make cereal, to say, all right, I want to sell my corn to you, and you want to buy it at a fixed price, and we'll figure it out. And that was a legitimate business contract. I'm producing something, you're buying something, we're agreeing on a contract. But then what happens is, what if, the U.S. government's never gotten into the corn market, not that I'm aware of. What happens if the U.S. government decide, well, I'm going to get into the corn market and start playing around with, buying and selling corn, and I can manipulate the price because I'm the biggest player on the block. And that's what's going on with gold. And that could go on with Bitcoin. It hasn't happened yet, because you can see the amount of derivatives outstanding, but it's trending in the direction where they're getting more involved in it. And so, to your generation, I would say, when we get Bitcoiners in government, when the system has collapsed and we're going to a Bitcoin standard, and we get Bitcoiners in government, and the new rules get written just as the rules were written post the 1929 collapse. We have the new SEC. I think one of the rules that has to be written is that derivatives will be banned. That the only derivatives allowed will be for legitimate commercial purposes. If you're a farmer selling corn, or you're a cereal manufacturer buying corn, you guys can do a derivative contract, or oil, whatever, anything. But there's got to be actual physical behind what you're buying and selling. You can't have just financial contracts on top of, there has to be a commercial, interest in it, not just a financial interest in it. Because if it's all financial interest games, the government, the biggest balance sheet wins, and the U.S. government has the biggest balance sheet right now. And so they can manipulate it in their favor and against those of us who believe in sound money. And they've done that with gold. And I think people who believe that just because all the Bitcoin is on a chain, it can't happen with Bitcoin, they're being naive. Because, who's to prevent Party A from doing a deal with Party B on Bitcoin at a fixed price? And whether they have the coins or not doesn't matter. That price somehow gets into the marketplace. If off the marketplace, you go, I sell you one coin for $20,000. You send me $20,000, and I say I owe you a Bitcoin, right? That's $20,000 that did not go into the system to push the price of Bitcoin up. That was a private deal. And let's say I don't have the coin, right? I'm just taking a financial bet against you. You're saying you want it to go up, and I'm saying I'll pay you if it does go up. And but that didn't move the price in any way, shape, or form. So your demand did not get reflected in the supply-demand balance. And that's the danger of paper. And it's a big thing, and it could become an issue. So again, to your generation, when we get to the point of writing the laws to fix all this shit, we got to ban derivatives.
Yeah. And that was one of Caitlin Long's main concerns, right? She calls it the rehypothecation, and she keeps doubling down on how dangerous this is. And obviously she's someone to pay attention to. She comes from the belly of the beast, so to speak.
She worked at
She lived in that world. Exactly.
25 years. Yeah. Harvard Law School grad. She's smart as a whip. And, you've noticed that, they've gone after her recently because they're trying to close the barn door after the horse escaped. FTX, Gary Gensler should resign in disgrace. It's just absolutely ridiculous the way that they allowed, everybody to get, taken advantage of by all these crypto schemes that so many smart people, including the leader of Swan, Corey, who just did a fantastic job of documenting. There's so many of us. I remember being in Madeira talking with a bunch of the Bitcoiners. We're all like, we just know Sam Bankman-Fried is a fraud. We know he's going to get wrecked. It's just a matter of time. We all could see it and knew it. And even Caitlin said she was sending things to regulators that she knew and heard and saying, look, this is not right. I can tell you there's bad stuff going on here. And nobody was paying attention, right? And so, here we are, right?